All right, today we're doing a deep dive into an equity analysis of Cubex Tubings Ltd. This is a company that's right in the middle of a really interesting business transformation. So the main idea from our source material is that Cubex Tubings is fundamentally strong. It's being positioned as a high-conviction growth play for the late 2020s, and it's happening right as we're seeing a bull cycle in non-ferrous metals.
So what's behind this transformation? Well, it's a really smart, strategic pivot. The company has basically shifted away from making simple commodity copper tubes. Now, they're focusing on high-margin specialty alloys, things like Cupro-Nickel and Admiralty Brass.
And that pivot into high-margin products is so important because these special alloys are absolutely critical for major growth areas like marine desalination and even nuclear power. Okay, let's build on that and look at the bull case. What are the major tailwinds that could really push this company forward?
Well, first off, you have the green economy. As you can see from the chart, India is aiming for a massive increase in renewable energy, up to 500 gigawatts by 2030. This national push directly boosts demand for high-conductivity products, which is exactly what Cubex specializes in.
The second bullish point, it's all about financial health. Cubex is in what you might call a virtuous deleveraging cycle. This chart shows how they've been using their own cash flow to pay down debt and seriously strengthen their balance sheet. They've got their debt-to-equity ratio down to a very solid 0.53.
And that kind of financial discipline leads directly to one thing, a big surge in profits. The source material points out that for the first 9 months of the financial year, their profit after tax shot up by nearly 64%, all while maintaining a pretty consistent return on capital employed of about 10%. To put an even finer point on it, for the entire 2025 financial year, the company's profit after tax grew by a staggering 67% year over year. That's 7 crore rupees, a really clear sign that their strategic shift is paying off.
But of course, a good analysis means looking at both sides of the story. So let's switch gears and talk about the bear case. What are the cyclical risks here?
It really comes down to this question. What are the main headwinds that could potentially slow down this growth story?
The number one risk is their sensitivity to raw materials. You see, the company is really exposed to swings in global copper prices. This LME copper price chart showing a 60% rally just highlights how volatile things can get. A sudden drop in copper prices could really hurt the value of their inventory and squeeze their margins.
And there are a few other structural things to keep in mind. Cubex has to import a lot of its copper. It's a small cap company with a market cap of around 172 crore rupees, and it operates a business that just requires a lot of working capital. You put all that together, and it points to more volatility and liquidity risks than you'd see with some of their bigger competitors. So, you've got the bull case and the bear case on the table. How does all of that get reflected in the company's valuation? And this is where it gets really interesting. Despite all that strong growth, the stock is actually trading at a pretty big discount. Its trailing 12-month price-to-earnings ratio is just 18.16, while the average for the sector is way up at 25.51. That's a discount of almost 29%. So what's the final verdict from the source research? Well, they land on a buy rating. They point to a very attractive price-to-earnings-to-growth ratio, or PEG ratio, of just 0.3. And their suggested strategy is to buy on dips whenever the stock is below that 110 rupee level. All right, let's step away from the fundamentals for a minute and pull up the charts. Let's take a look at the technical picture and see how the market is actually pricing all this information. This long-term monthly chart tells such a great story. You can see the stock was just stuck in this consolidation phase for years and years, and then a huge breakout in 2023. This move just shattered the range the stock had been trapped in since all the way back in 2017. Let's zoom right into that period. From 2017 through early 2023, the stock was basically going sideways. So that breakout was a massive event. It's what propelled the price from around 40 rupees to a high of nearly 120 rupees by the middle of 2024. And if we look at the most recent price action, it seems to be taking a bit of a breather. It's consolidating in what technical analysts call a flag pattern. This really creates a wait-and-watch setup. The key levels to keep an eye on are the 120 rupee mark on the upside and support down around 75 rupees on the downside. And all of this brings us to the final and most important question for any potential investor.
Is Cubex Tubings just a cyclical play that's tied to the ups and downs of metal prices? Or has its strategic pivot actually turned it into a true long-term structural compounder? That, right there, is the core of the whole debate.